Hi, folks. Nick Shaheen here, recapping the week ending May 29th. The week ended on a negative note. The scoreboard shows minus 0.6% drop on all major indices. Nothing leading the way down that sticks out, which unfortunately closes the week red for all three indices that we usually track, which are, we've got the SPY red, and the Qs, which represents the NASDAQ, and then the small caps represented by the IWM, which may have had the best relative performance with regards to the size of the drop. As far as trends are concerned, yes, we're maintaining higher lows, which is good, but what's not good is that now we're starting to droop with the highs, and we're kind of like range bound, we're stuck. The good news is that we're doing it from higher lows. So looking out, we still have the possibility of breaking down a rising wedge or breaking out from this level in order to try to reach the upper end of that wedge. So yes, the jury's still out. We're just one headline away from any of that. So speaking of headlines, this week, the major change in my focus is how do we trade. I step out of sentiment trading, which I've been saying for weeks now, because the facts have not changed, folks. It's exactly the same facts. Greece did not just get into trouble. They've been in trouble. We've known this deadline coming. It's just they kicked the can. So the blinders are off a little bit, but the facts have not changed. Sentiment has been changing. And this week, we reverted to headlines. I will save you the trouble of the headlines of each of them, but the bottom line is headlines come out positive, rumors, deal in the works, immediate opposite, nope, no deal. Deadline's gone. Nope, not deadline has gone. Yes, we can make the payment. No, you can't make the payment. Well, where will the money come from? So we are headline trading, and headlines will ignore all the good homework we do. We do homework to find levels. Okay, I can sell here, I can sell here, I can buy here, I can buy here. Headlines blows everything out of the water. How do I mean? I can show you an example just that happened today, and let's see here. BMY. Headline comes out. Boom. A lot of people did a lot of good homework. Thought, Bristol Myers is a good company, well managed. Headline comes out. Regardless of how well valued it was up here, if somebody bought it up here, they're down 10% already in one day, or 7% ended up. It was down 9% at one point. Okay, the opposite. I know there was one that was up. Humana. Somebody thought, okay, it could break out here. Actually, we did. We thought it was a coin toss because now it's squeezed, higher lows, knocking on floor on roof, which I drew in orange, and I said I drew this circle, and this circle as two possibilities for outcome. And guess what? Headline comes out, up 20%, more than 20%. So headlines ruin homework. So we switch overall from trading sentiment to adding a level of trading headlines. What does that mean to me? It means that if I'm trading the SPY via credit spreads, I make my spreads wider. So I don't take risk here and here. I go to here, to here, I go to here, out in time here. I go longer out in time with credit spreads. And I just basically make more room for possible error because the headline may temporarily ruin the trade. That's the only difference. So that's the focus. The things that are in focus are still the same. I still want to see the small caps behavior, and this week they didn't go in an outstanding way one way or another, so I'm happy with that. I still want to see Apple. Apple needs to play a leadership role, and today it led a leadership role in the sense where it didn't compile. It tried all day to rally and keep the markets together, and it is trading around where it should be, based on what the expectations from the traders in the options world have had this week. We've said 131, 130, 132. That's been the magnet, and guess where it is? 130 on the money. So Apple's playing a good role. I also looked at the financials, and the financials were dragging this week, today at least. So they tried to, but they couldn't. So this week has been all about disappointments. Yeah, we've had bad days, immediately great day, no follow-through for the great day, and then a bad day today. But for a bad day today, the scoreboard wasn't bad until late in the day. We closed badly on Friday. Therefore, the Friday close left a sour taste, but that doesn't matter. Over the weekend, we have 3 days to brew more headlines. So the Monday open will likely depend on what headlines. Have I said headlines long enough? Okay. So what do? I pick on wounded stocks if I want to do some debit put spreads, or I take long shots on mega breakouts. There are possible setups for breakouts in the small caps. They just need to X mark the spot. They just need to break that X and go. And if they want, there's room. The bulls have room. Same with the SPYs. So the easy way to do it, pick a direction where you feel the markets are going and just buy a call spread or a put spread. That's a cheap way of doing it. Or you can sit out the week. That's how I do it. I book some profits. I balance the portfolio. I look at something that sticks out. What sticks out? China. They dropped 6% in one day yesterday. Here's the FXI. Not quite China, but it is a China ADR. So it's an ETF actually for large cap, so it kind of simulates China. Almost a double in a year, not quite. Anyway, 35 to 53 or whatever. And this doesn't look too good knocking on this floorboard. If this floorboard gives way, look at this gap and look at how fast we got up here. So put spreads here, why not? If you like to do put calendars, even better. If you want to do put slides, harder to make pay out, but the calendars could work. These are lottery tickets basically because you don't know if they were going to bounce here and what news is going to come out of China or anything. But one bad move in China and this could pay big time. So these are all things I can do. What I don't do is I don't take too close of a risk, meaning I don't put all my money in one direction right at risk right here. So I don't go all in or all out. I don't short everything. If I'm short some stuff, I pick on a few longs on bad days like today. So anyway, again, next week I'm going to focus on the same things, but forgot to mention currencies. Currencies are really important. I think that's what drove us this week. It was ignited by the Greek headline, but it's currency that did it. Not rates, not bonds, not nothing. So keep an eye on currency, and we're inconsistent. Markets are inconsistent. One day they trade with the dollar, the other day they trade against the dollar. One day they run with the bonds, the other day they run against the bonds. There's no consistency. That's a sign of indecision, wishy-washiness. Nobody's trading thesis. They're just reacting to headlines now. So keep away from trouble and leave room for error. Nick signing out. One thing I forgot to mention that I've mentioned before, and it's only fair that I revisit it, the transports. I've been calling a down move in the transports for a while, and I drew the line where it needs to hold, and the hold is breaking, and now they're in correction territory and headed to this one. And, it's taking the market down. The good news is that the markets are still hanging while they are breaking down. So if they stabilize, then they may provide some support for the market overall. But this is one thing we've mentioned before and only fair to revisit again. All right, this time I'm really signing out.